everyone, welcome back to my YouTube channel. Welcome back. Today we are receiving more news coming out from the stock market. A lot of stuff are coming out globally. So we are hearing many updates from many foreign countries talking about their economy and how they are performing. But what is really interesting is that we are seeing a growing sign of a global economic concern are mounting, and investors are flocking into the US dollar. Why is this happening? They are leaving their local currency and are now buying the US dollar because they have faith and confidence in the US Federal Reserve. That is power. So that's what we're seeing. The US economy is pretty strong despite we are seeing a significant sentiment within the possibility of the US entering a recession. But however, that does not discourage foreign investor from buying the US dollar. So the demand for the US dollar has gone up significantly due to a global economic slowdown. Let's look more. As of right now, Credit Suisse investment banker are saying, hey guys, we are seeing a growing sign of inflation, and inflation has hurt us within our business operation. Due to this, we are expecting for a more brutal cutback as the Fed continue to hike up their interest rate. And also be prepared for this mindset because we are trying to survive this ongoing economic uncertainty. And this is our latest stuff coming out from the market. Credit Suisse say, hey, prepare for a brutal cutback because the market is doing so, and we must adopt and uh, adopt this policy. What is really shocking is that Ford just recently announced that they will cut 3,000 jobs and they pivot to EV software. This is a problematic situation. Why did Ford do so? Well, inflation, folks, the rise in cost of labor and the rise in cost of supply actually put these companies on edge. Well, they cannot afford to hire all these people. So what we have seen is that Ford just announced a brutal cut measure by slashing 3,000 jobs from the company. This is just the beginning of how bad it is, and the U.S. economy is not heading in the right direction. We have seen this, and we have heard many studies and surveys have found that many American investors and the American people are believing that the U.S. economy is headed in the wrong direction. Not even we are referring to the American people. We have seen surveys that have asked company executives, and they have say the same thing. Hey, the economy is in a terrible position right now with so much macroeconomic uncertainty within the market. There's no clear distinguish or a pathway to understand where will the economy lead. This is just a beginning. Ford latest cut actually shocked the market and really shocked the investor. Let's move forward, folks. So we are now jumping to the European stock market, which their future was lower. Recession fear in Europe are mounting. We are seeing this. There are reasons why this ongoing war in Europe actually hurt the European economy. So Russia invaded Ukraine, and right now Ukraine is trying to fend off Russia. Russia is the key of energy supply for Europe, and Russia is trying to say, "Hey guys, we are gonna cut some of the supply." So a lot of threats are coming out from Russia because right now fear is being recreated in Europe, causing another macroeconomic uncertainty as geopolitical tension rise over European recent support to the Ukrainian government. So right now, stock market are expected to up and lower on Monday for the European stock market. Right now, we are starting a negative week on a negative note as investors fret about potential global recession and tightening monetary policy. And we have seen many countries within Europe increase their interest rate, and that's really hurt the economy globally and the local economy too. We have seen recession fear outgrowing in energy as energy giant Gazprom said it will halt natural gas supplies to the continent for 3 days at the end of the month. This is a growing sign, folks. So energy is very important because it's really keep the economy moving in Europe. If there's no source of energy, the European economy just suddenly halt, which causes economic collapse there. That's why it's really essential. And even though we have seen that gas prices in Europe are already near 5-month high, while gas price in the United States has gone down significantly. But however, there's still a lot of pressure from Russia and Eurozone flash PMI. Their forecast was 49 and their previous was 49.9. What we watch closely this week because their data will be released soon for recession risk. So there's still a lot of stuff coming out from the market, but we have seen another month of contraction in business activity. After the final composite PMI index slumped to a 17-month low July. This is really concerning, folks. So global economic slowdown is on the rise, and the concern are mounting globally here. Let's look with German recession increasingly likelihood according to Bundesbank. So we have seen the energy crisis in Germany actually gone up significantly, jumping around 15%. So right now, the German people are now paying more for energy prices than ever before due to the ongoing conflict with Russia and Ukraine. So that's really tearing the European economy apart, mainly hitting Germany the most here. So this is very shocking to the global economy. So China is the world's second largest economy in the world, globally speaking here, according to GDP. And the central bank say, hey guys, we are gonna cut another rate this Monday. And this actually creates significant fear within the market because right now, if the second world largest economy saying, hey, we are seeing an economic slowdown within our local economy, this could have a trickling effect within the global economy too. So that's what we are seeing. The world's second biggest economy saw an improvement after some coronavirus restrictions eased in June, but consumer and business sentiment remain weaker than usual. That is a problem. 1 year long prime rate, which they reduced from 3.7% to 3.65%. Their main goal is try to stimulate the economy again. This is what the central bank of China is trying to do. And this is just the beginning, folks. So recession concern are mounting as economic slowdown within China persists and continue. But not to mention though, they did have a crisis within their housing sector. Now the China is planning to bail out those institutions by providing more than $29 billion in special loan to troubled developers. So right now, China will provide around 200 billion yuan, equivalent of $29.3 billion, in special loan to ensure stall housing projects are delivered to buy. People, family, and familiar with the matter say ramping up financing support for a beleaguered property sector. This is a problem. So for some reason, the real estate sector in China actually collapsed though. It was a really big trouble. And home buyers just boycott their mortgage payment, causing a stalling within their housing sector, actually causing the housing market to crash significantly. And there were many big parties that did bail the system. And right now, China is forced, central bank forced to loan out these money to these guys in order to try to regenerate the economy. But right now, with homeowners just boycott mortgage payment, that is still creating more problem than actually solving it. So with new support coming out from the Chinese government here, with a $29 billion special loan to troubled developers, they hope to ease down the economy. And last but not least, Xiaomi just plan to lay off 900 employees as revenue decline amid slowing Chinese consumer. So this is what we are seeing. Global economic slowdown is happening, and China is actually signaling the global economy prepare for the worst because we are seeing something that's happening in our country right now. Okay, folks. In the end, though, what are my thoughts with the U.S. economy as right now? As of right now, we are seeing a lot of economic uncertainty within the U.S. economy. Recession concern all mountain in the U.S. And not looking from the global economy and perspective, we have seen a lot of concern of a global economic slowdown China is actually re-signaling a global economic slowdown, which caused a tremendous fear within the global economy here. And we are continuing to analyze the market because things change very rapidly, and we'll continue to provide you with more updates. But Ford did really shock investor by cutting 3,000 jobs. That was really crazy. So that's what we are appearing at recession concern on mountain. And then if you enjoy watching my video, please click on that subscribe button. And also don't forget to click that like button. Thank you everyone. Have a nice day.